Welcome guys to today's episode. This is Melody FS Academy, and if this is your first time of coming across this channel, please do well to subscribe to this channel. Turn on the notification bell to get notified when we upload our weekly content. Okay, so in today's series we're going to be looking at the Ict Dealing Range. Okay, so this was one of the is it the closing episode on the 2022 mentorship. Okay, so one of the closing episode series thereabout, and I still talked about a dealing range. Okay, so it was a eye opener, and I learned a lot of things from it. Okay, so I decided to share it maybe to those of us that didn't understood it very well from the video. um so let's just get down to it. Okay, so let's go through it. Ict Dealing Range combined with intraday trading live trade experience series. Okay, so let's go through it. Now we have, this is the Nasdaq US 100 futures market. Okay, so I've decided to leave the forex market for a while and stick to the futures market, because currently Michael is right, Ict himself is right, and the forex market right now are not really moving towards to expectations. Okay, are not really meeting expectations, because in if we remember clearly in one of our previous episode when we talk about institutional sponsorship. Okay, one of the ways to know, to identify it in price action, is whenever price gets to a specific institutional reference point. Pardon me, this is outside the scope of this video, but I just felt the need to state my own opinion on the forex market right now. Okay, so I'm not saying the markets are not moving, but they are definitely moving, but they are not kind of moving to the taste or how I want it. Okay, so and Ict himself also made mention of it. Okay, so I really looked at it from his point of view and came to the conclusion that the forex markets are not really alive right now. Okay, because when we talked about institutional sponsorship in price, we made mention that one of the ways to identify institutional sponsorship in price is whenever price approach a level of interest and a higher time frame institutional reference points, we should see some kind of immediate feedback. Okay, we should see some kind of move, a quick move away from those levels. Okay, so those institutional reference points are very should be very sensitive. Okay, but each of the institutional reference point that I have back tested and for tested in the forex market, whenever price approach these levels, it tends to hang around. Okay, it tends to hang around. There's absence of immediate feedback. Okay, so I guess I'm just going to sit on my hands on the forex market. I'm moving a little bit to futures market. Okay, until I see maybe a change, or I see a kind of institutional sponsorship in the forex market. Okay, so I'm going to make a video on that and share with us my own opinion on the forex market right now. Okay, so now let's get back to dealing range. Okay, so this is a price action on the Nasdaq US 100 or Nasdaq. Okay, so the futures market as we know it is currently, as you can see, the underlying trade is bearish, right? And the what's it called, the talking about the dealing range. Okay, talking about the dealing range, before we proceed, I want us to look at, study this price action and do our own annotations. Okay, so now the concept of a dealing range is what makes it a dealing range. Okay, what makes it to be called a dealing range, what qualifies it to be a dealing range, is simply the when price takes out the buy and sell side liquidity. Okay, the buy side and sell side liquidity, that's what makes it to be a dealing range. Okay, right. So as you can obviously see, this price action right here before rows, you can see we have an old high right here, okay, and we have an old low right here, okay. So looking at this, you can see the buy side liquidity has been purged, okay. The sell side liquidity as well has been purged, okay. So this is a dealing range from this high to this low, because the buy side has been purged and the sell side has been purged as well, okay. So this is our dealing range, okay. So this is a dealing range. That is just what a dealing range is all about, okay. Is the is when the buy side and sell side liquidity has been purged or taken out, okay, or run through any of the institutional terms you deem fit to use for it, okay. So now let's do some markup, let's do some annotations on this, okay. So we had obviously a downtrend, right? Then we had this. Then ICT also talk about breakaway fair value gap or breakaway gap, okay. So this is a fair value gap that is unwilling to be filled at that particular moment until lower objectives are being met, okay. So a breakaway gap is simply a fair value gap that's refused to be filled up, okay, until lower objective or price until lower price objective are met, okay. So this is a breakaway gap or breakaway fair value gap, okay. So you can see price only traded through once, okay, and the next two candle failed to trade into this fair value gap. So anytime we see a fair value gap that refused to be to be filled, that is known as a breakaway fair value gap, okay. So now back to our dealing range, okay, back to our dealing range, simply the run on buy side and sell side liquidity, right? So from this high to this low, you can see we had a purge on sell side liquidity has been taken out, okay. So now and we have this short term high right here, and the market created a lower leg, a lower low, right, taking sell side liquidity out again, okay. So then you can see we have a buy side purge, buy side liquidity taken out right here. So this is our current dealing range, right? So now anytime the market reaches for a buy side liquidity, the next level is going to reach for on a dealing range is the sell side, okay. So once the market reaches for sell side liquidity, it is going to reach for a buy side liquidity. So that's basically what we can see here, okay. The market reached down for sell side liquidity, and where is the buy side liquidity going to be resting now? Above this old high, right? Then the market reached for the buy side liquidity. Now here is the sell side liquidity. Once the market takes out this previous low right here and reaches for that buy side liquidity, the sell side liquidity is no longer here. Sell side liquidity is immediately moved from this short term low down to this short term low right here, okay. So this becomes our sell side liquidity that we are going to be anticipating the market to reach for, okay. So now as you can see, price the market did in fact reach for the sell side liquidity resting below here. So now where is our prior to this short term low being formed, okay, on this candle? Let's just pretend that this has not happened, none of this has happened, okay. So prior to this sell side liquidity being reached for, where is our buy side liquidity now resting? Where's our buy side liquidity residing right now? Prior to this swing low being formed, okay, prior to this short term low being formed, here's our buy side liquidity residing, having this sell side liquidity taken out, okay. So of course our buy side liquidity will be resting above this old high, okay. So now what's basically happened right here is that this is market makers hedging the market, okay. They are hedging the market because of course, as we know it, their positions are larger than us, okay. Their positions are large and it can't be fit in on a their positions can't be fit in a single trade, okay. So they can't fit their orders in on a single trade. So as the market is declining, they are buying on time, okay. They are buying on time, and this short term buy, okay, this short term long entries that goes in, that drives price to rally up a little bit, they are buying up and to accumulate the short position. So they are buying out. Remember we said anytime the market makes a lower low, goes below a short-term low, that is short-term discount, right? So they are buying at discount. They are buying the buy stops, the set stops from the set stops of those that is residing above below this old low, right? This short-term low. So as it breaks, they are going to be set stop residing below this short-term low for traders that want to go short, that want to sell on a breakout, right? So they are going to accumulate those sell stops and take it. The market is going to go the other direction and they are going to sell short to those that are looking to buy at premium, which is above this old high, that are looking to buy a breakout at. They are all that those traders that were lucky enough to go long here below, that were lucky enough to go long here. Okay, so they are going to have their those that went short. Okay, those that were lucky enough to go short here, they're going to have their stop loss residing above here, and those that the traders that are looking to go long on a breakout, they are going to have their buy stop resting above here. Okay, so anytime the market makes a lower low, goes below an old low, okay, those that are sold on sell stops, okay, they are going to have smart money are going to accumulate those positions as a long entry, being the market uh already reaching below this old low as a short-term discount, right? So they are accumulating those short positions as a counterpart to their long entries, and they are going to look to exit the market at above this old high. Okay, so those that we are looking to buy at premium at high price, those that are willing to buy at higher price, okay, so they are going to sell to those to take the market short. Okay, so this right here is hedging. Okay, so the market is being hedged because their orders cannot be filled in at once. Okay, so that's basically what is going on. So every time the market wants to go down, we have to see some sort of old high being taken out, right? Some old high being taken out and some buy side liquidity being pushed. Okay, so that is basically what happened here. So now back to what I was saying, prior to this swing low being formed, okay, we didn't know this was a swing low being formed right here until we see the third candle, right? So now prior to this third candle being formed right here, where is our buy side liquidity going to be residing? Okay, which is above this old high, right? So this is where we should be expecting price to reach up into to continue going down. Okay, so remember we talk about the buy side buy and sell as market makers buy and sell model, right? For the market to go up, it has to come down to go up, then from the market to go down, it has to go up to come down, right? So that's basically what's happening there. So now we had this swing low form, right? We had this short-term low form, and this short-term low being formed is an indication of the market uh going into a retracement phase. Okay, so remember we said there are going to be times you're going to have short-term retracement and long-term retracement, right? So in this case we had a short-term retracement and the market turned around again. Okay, so now sell side liquidity was being pushed, so having this old low, short-term low taken out, okay, the sell side liquidity being drawn in, okay, into the marketplace, the sell side liquidity, the buy side liquidity automatically moves from this old high down to this short-term high. Okay, because why is that? That's because this was a short-term high that broke this low, right? So this was the short-term high that broke this low. So those that were lucky enough to go short here are going to trade their stop loss down here. Okay, and those that are having their buy stops resting above here, as they saw this break below, okay, you're gonna trade your buy stops here to buy on the breakout. Okay, obviously to buy on this breakout. Okay, so now buy side liquidity automatically moves from this high to this high. Okay, so now sell side liquidity has been pushed. What is the market going to reach for? The market is going to reach for the buy side liquidity. Okay, smart money are going to look to offload those long positions that they accumulated here when they bought the sell stops of those that were looking to go short. Okay, they bought from the sellers that were looking to go short right here. Okay, they bought from them. They sell those that were willing to sell at a discount. Okay, those that were willing to sell at a discount, smart money accumulated those, and they're going to look for where to offload those long positions. Okay, so now you can see how smart money edge the market. Even in a downtrend, they buy. Okay, they buy because they have to provide remember they are the liquidity provider, right? So they have to take the other side of your order. Okay, someone has to fill in those orders, those that are looking to sell short. Okay, smart money accumulates, and as the market goes up, they are in profit, and they are looking for those that are willing to buy at higher prices. Okay, those that are willing to buy at premium. Okay, so we made mention anytime the market goes above an order high, that's a short-term premium, right? So this becomes our dealing range. Okay, so this becomes our dealing range. Now as the market trades above here, pushing the buy side liquidity, and at the same time we have this market gap right here. Okay, so now I want to take our attention to this last set of down candles before this up move. Okay, so this last set of down candle is referred to as what? Okay, so I want you guys to pause the video and think. Okay, the last down candle before a run on buy side liquidity, before we had this push on this run on buy side liquidity taking out. Okay, this liquidity resting above here, I was taking out, then price traded through it. What is this set of down candle referring to? Okay, so think for a moment before I answer that. Okay, just think for a moment, pause the video and have a rethink back on it. Okay, so now this down last set of down candles prior to this run up move. Okay, this run on buy side liquidity before declining, this is the breaker block. Okay, so this is our breaker block right here. Okay, so these are the last set of down candles before this up move. Okay, so now what I actually did was to take my fib, okay, from the body of this candle to the lowest, to the body of the lowest down close candle. Okay, so the midpoint, that is my mean threshold. So now what I made reference to when I said the forex markets are not really giving me the what like they're not really providing, the forex market is not really doing what it should be, uh it should be doing right now. Okay, like the response, the feedbacks we are getting from the forex market, why I'm actually, what I was referring to was this. Okay, so now looking up. Okay, so we have already, this is price. Okay, if we are to view this from the PDR range perspective. Okay, so this is our range, right? But this is a one, this is a long-term dealing range. Okay, so this is a short-term dealing range inside of this long-term dealing range. Okay, so looking at this dealing range from this high to this low. Okay, if we measure that up, okay, if we measure this move from this high to this low, we'll have our midpoint somewhere around here. Okay, so now as price, and let's assume price is leaving this area of discount. Okay, remember we talked about our discount institutional point could be an old low, could be price range moving from some sort of order block, fair value gap, or any of the PDR rates, okay, any of the discount rates. Okay, right now we have price moving from an old low. Okay, so price found support moving from this old low, right? So liquidity has been pushed, and now price is leaving the old low. Okay, so now from this point to this low, okay, from this high to this low, the midpoint is somewhere around here. Okay, so now if we are to looking at this above the midpoint, above 50% equilibrium. Okay, what is the first PDR that we can see? Okay, so looking to the left side, what's the first PDR available? What is the first PDR we expect price to reach into? Okay, that will be a mitigation block. Okay, is there a mitigation block as price is expanding higher, that price could reach up into, to find as a as to find some resistance that we can sell off, because price is relieving some level of discount into premium right now. So is there a mitigation block? Obviously there's none. Okay, we'll scratch that off. Is there a breaker block? Right here. Okay, so we have a breaker block right here. So this right now, since we have a breaker block, there's no need of looking for further premium arrays. Okay, but remember we made mention in that particular episode that there are going to be times some of the arrays, okay, some of the premium arrays are going to prevent price from reaching for higher arrays. Okay, so obviously we had this will be our bullish order block, so our bearish order block. Okay, so this will be our bearish order block because this is the candle that has the highest range between the low, the open to bearish order block, because this is the candle that has the most range, okay, between the low and the open and the high. okay, the open and the close, sorry. So we'll mark that out in time. And also we have again another fair value gap. Okay, we have a fair value gap which is obviously higher than the breaker block. Okay, so we have this fair value gap and we have a liquidity void. This is a liquidity void, a fair value gap, and an order block, then rejection block, and an old high. Okay, so now as price reaches up in this list of premium arrays that we have just outlined, the more it reaches up, the higher it goes into premium. Okay, so now we talked about some of the arrays are going to prevent price from reaching higher, okay, from going up, from going further up. Okay, some arrays are going to prevent price from reaching for the higher premium arrays, okay, which is obviously this fair value gap. So this fair value gap is higher than this the breaker block. Okay, so now looking at the mean threshold of this breaker block, this when I made reference to the Forex market not giving that feedback that we ought to see in price, this is what I made, this was what I was referring to. Okay, so as price reached for this, notice as price reached into this mean threshold of this breaker block, notice the immediate response we have from it. Okay, on Monday was kind of small because we had this short-term high that was forming. Okay, the swing high was obviously forming on Friday, created the first candle. On Monday obviously created the second candle, and the third candle which was created today was formed today. As you can see, notice the immediate response, the immediate move away from the mean threshold. Okay, so this is what Forex is currently lacking. Okay, in the Forex market, we have different pairs that I've been looking at that price trades to some sort of institutional reference point, and instead of giving that immediate feedback, price tends to hang around and begins to consolidate. Okay, so that to me is lack of institutional sponsorship. Okay, but as you can see, immediately price hits this mean threshold, it moves away. Notice it moves away with an immediate feedback. Okay, it moves away immediately, it gives that immediate response. Okay, so this is what Forex is currently lacking right now. Okay, so this is what Forex is currently lacking right now. So now we have obviously purged the buy side liquidity, right? So we expect price to reach for the sell side liquidity. So yes, sell side liquidity is going to be residing right now. Okay, yes, sell side liquidity is going to be residing. Of course, sell side liquidity is going to move from this old short-term low to this old low right here. So sell side liquidity is obviously resting below this old low. Okay, so now let's go through further. So now this is that mean threshold, right? This is that mean threshold. You can see the immediate feedback, price moved away from it, and this is that old gap. Okay, it's already filled completely. As you can see, we have already filled it, and this is that old high, buy side liquidity being pushed. Okay, so now price moves and you can see the immediate feedback, it responds immediately from the mean threshold of that breaker block. Okay, so this is today's price actions. Let's go through today's price action and see what we did. Okay, so now this is a 50-minute time frame. Okay, this is a 1 hour time frame. Okay, so now this is the current dealing range we are in. Okay, so price is obviously in the discount array, in the discount in the premium spectrum. Okay, so we are expecting it to reach into a discount array. Okay, so looking at the dealing range that we are currently in right now, okay, below the below the midpoint, below the 50% level, what is our where is our reference point that we can expect price to to take our profit at? Okay, obviously we had this fair value gap that has been filled, and we have these old lows. Okay, we have these old lows. Obviously we have these old lows that we can take partials at. Okay, these old lows, and ultimate target is this old, is the sell side liquidity resting below this old low. Okay, the sell side liquidity resting below this old low. So this is our overall target. Okay, so we can take partials at this old lows. Okay, we can take partials at this old low. Now in this price action, fair value gaps does not matter. Okay, because price is obviously going to trade through your other blocks, this is where the concept of other blocks failing to hold, okay, because for your other blocks to react, for price to react off your other blocks, fair value gaps and the rest, okay, it has to be in the right framework, it has to be in the right context, okay. So in this scenario, hoping for an order block to hold or a fair value gap for price to repair off it is very of a low probability, okay. So now let's go through. Now this is the 15-minute time frame, okay. This is the 15-minute time frame of today price action, okay. So this is my New York midnight opening, okay. This is my New York midnight opening price, okay. So I want you to pause the video and study these price actions before we continue, okay. So kindly pause the video and do your own annotations and before we proceed, okay. So now this is the equilibrium, okay. So we are still in premium spectrum of the whole of the dealing range, okay. We are still in the premium spectrum of the dealing range. Now we have our New York midnight opening right here, okay, and this is our New York Killzone, okay. Remember, the Killzone for the futures market is different from that of the forex market, okay. The Killzone is obviously from 8:30, okay, and the equities market is going to open at 9:30. So these two time windows are very sensitive, okay. These two time windows are very sensitive. So we start our Killzone from 8:30 to 11:30, okay. So let's go down further. Now we have the New York midnight, okay. Notice we had an equal highs, okay. Throughout the London sessions, although we are above the midnight opening, okay, throughout the New York the London Q zone, okay, which is obviously we don't trade the Q zone, the London Q zone in in the futures market, okay, because we start our trading from 8:30 New York Q zone, okay. So obviously you can see throughout the London Q zone, price consolidated, okay. Price was just moving in the range, created these equal highs, okay. So now prior to 8:30 opening, was the most significant high? It's obviously this equal highs, right? Then we had this. So but this is enough, okay. This is enough for our run on buy side liquidity, okay, because obviously our bias is bearish, right? We are expecting lower prices, okay. So we have to see a run on buy side liquidity to go down, right? So now prior was the first swing high, most significant swing high prior to 8:30 New York time, okay. That would be this equal highs, okay. Of course we also have this old high, which is the London session high, okay. So this will be our London session high, okay. So now as you can see, price made a run on buy side liquidity, okay. This is buy side liquidity being pushed right now, okay. So let's go down further, okay. So when I saw this, okay, so I started to anticipate my shift in market structure, right? We are now anticipating a shift in market structure. This is the 5-minute chart, okay. So I dropped down to the 5-minute chart and you can see we made this little move up. So the real market structure happened right here on the 15-minute chart, but this was also a shift in market structure, okay. So let's go down deeper for an entry, okay. Obviously we had this fair value gap right here on the 5-minute time frame, okay. So now going down to a lower time frame to look for an entry, this is that equal highs, okay. This is our midnight New York midnight, and this is price running on buy side liquidity, okay. This is buy side liquidity being pushed, right? Then I got a failure swing, okay. Immediately I had this failure swing, I decided to check if there was an SMT divergence, okay, because obviously we had a market that made an indication of wanting to go higher but failed to move above the previous old high and broke structure to the downside, okay. So I pull up my DSYK, which is the dollar index, and as you can see, during the same time the Nasdaq, okay, failed to make an higher high, the dollar index made a lower low, okay. So the dollar index made a lower low right here. So you had this short low, this this old low, and you can see the dollar index dropped below that old low and went up. But at the same time, the Nasdaq futures market failed to make a higher high, okay. So this right here is an So this right here is an SMT divergence, okay? SMT divergence, smart money to divergence, okay? So now what is actually going on right here is the Nasdaq market is being heavily distributed, okay? So the market is this market is heavily distributed, is heavy, okay? So it's being distributed right now, it's being sold off on weakness, okay? So this market is currently weak, okay? This market is being heavily distributed and the DSY is being heavily accumulated, okay? So money is being moved from the Nasdaq market to into the DSY, okay? So that is why the market made a lower low, accumulated more more longs to go up, and the Nasdaq futures failed to make a higher high because it was is heavy, okay? This market is heavy, so it failed to make a higher high and broke down, okay? When it broke down, it had this imbalance, okay? So this was my entry, okay? So when the market traded back up right above the lower part of the imbalance, so I got it right there and my stop was obviously above this short-term high, okay? So this is what I checked for, okay? So there are going to be times when you have a situation of a higher a failure swing like this, okay? You should make, check the DSY for a possible SMT divergence, okay? So which was what I actually did today, okay? So when I saw this, I checked the DSY. I decided to pull up my DSY at that minute, okay? So I saw the cracking correlation, okay? So they both tend to move in tandem, okay? They both tend to move in, they tend to have the same behavior, right? If one is making a higher high, the other should be making a lower low, right? But this particular asset made a lower low and we had the Nasdaq futures market failing to make a higher high, okay? So this was being heavily distributed and accumulated, okay? So this is SMT divergence, okay? So we have already talked about this in one of our previous episode, okay? So now I got in right there, okay? So I got in right there and my first target is my TP is actually to take out my profit below the midpoint, okay? Because this is obviously the premium side, we are still in the premium side, okay? So I was looking to target this. I was hoping the market will reach for the equilibrium today in today's price action, okay? So although I took out partials in an equal lows, okay, that's probably at the left side of the chart right here, okay? We had some clean lows right there. I took out partials right there, okay? I took out most of my positions and I'm holding for this equilibrium, okay? As you can see, price is halfway there, it's almost there, right? At the time of making this video, price is almost there, okay? So that's a risk reward ratio of 14 to 1, okay? We have a whooping sum of risk reward ratio of 14 to 1, okay? So that is just all about, that's how we did today, okay? So now I hope everyone can understand why I'm shifting my interest to the futures market, okay? So I'm kind of leaving the forex market, although I'll be analyzing and be looking for potential setups on the forex market, okay? But if price gets to my point of interest and it fails to give that immediate feedback, I'm just probably going to leave the setup behind, okay? I'm going to be on the trade, okay? So I hope we have understood the concept of the dealing range, okay? So a dealing range is simply referred to as a dealing range when there's a run on buy side and sell side liquidity, okay? So for a dealing range to be referred to as a dealing range, there has to be a run on buy and sell side liquidity, okay? That's just all what a dealing range is all about, okay? So I have showed us example, and currently what I'm anticipating for price to do right now, since we have already had a run on buy side liquidity, okay? So it's feel safe, okay? It's safe to see that the market is reaching for the sell side liquidity, okay? So I'm expecting, so until price gets here, my bias on this particular pair is going to be bearish, okay? It's going to be bearish. Obviously you can see from the 1 hour time frame, we have no institutional reference points that price can find support on on the below the midpoint. We just had old lows, okay, old lows for partials, and this is our overall target for the week. Okay, this is my overall target for the week. I'm just going, and as you can see, price is still in the above equilibrium. Okay, so in premium side, so we can still be looking for to add more sell positions tomorrow. Okay, we had this fair value gap. Okay, you can see we create this liquidity void, so tomorrow we should see some kind of retracement or so. Okay, so that is just all on this video. Okay, so I hope we have learned one or two things from this video, and please, subscribers have dropped a lot. Okay, and checking the statistic of our videos, we can see the viewers we have, the new viewers we have, that we have a lot of new viewers that are yet to subscribe. Okay, so please, if this is your first time, or you are a new or returning viewer and you have not subscribed to this channel and you like our content, please just show us an appreciation, encourage us by subscribing to this channel. Okay, turn on the notification bell to get notified when we upload our weekly content. Okay, so, and I will see you guys in tomorrow's trading day. Okay, so do have a good